All right, well, hey there, everyone. John here with Crypto Top 10, back again for another day to talk about some of the trending articles in the crypto news space. It's a bit of a rough one out there right now, so without further ado, let's hop into things. Though I do always have to say thank you for everyone who has subscribed, and link down in the description. You can check out all the articles talked about. So hopping in with the first new trending article, Yearn Finance is going to be revamping their vaults as their liquidity has tumbled 26% in the past month. Kind of a broader trend occurring amongst a lot of DeFi protocols right now. For those of you who don't know, Yearn Finance has been the hottest thing in DeFi over the past couple of months when it introduced high-yielding liquidity vaults, which boasted 3-figure annual returns. So, yeah. However, since then, liquidity has fallen back and collateral has been shifted to better-yielding pools, resulting in a slump in earnings, according to DeFi Pulse. Yearn's liquidity has fallen 26% over the past 30 days. The best examples of this are the YETH Vault, which when launched promised over 90% APY in Ethereum for those that deposited into that vault. At the time, it was described as a, quote, black hole, unquote, for Ethereum. I would agree with that. You can earn 90% returns on this. That's going to suck up everything under the sun, with people also believing it would be a boost for Ethereum prices, which it was in the short term. Today, there are still almost 100,000 Ethereum in the vault, according to Yearn stats, but earnings have plummeted to 1%. 90 to 1. Eesh. So YETH is not the only vault to see this earnings slump, with the high-yielding Curve Vault, which once boasted 3-digit returns, now only getting you about 10%, and the Wi-Fi Vault is not much better. They need to do something to kind of get people back there, to lure back in the liquidity, and they've got a few upgrades in the pipeline to do so. Yearn has been trying to develop their version 2 vaults, which are likely to increase earnings for liquidity providers with shifting strategies. The YETH vaults are also undergoing an optimization process that will enable CDP, or collateralized debt positions, to be shifted to new strategies without totally unwinding the debt. Meanwhile, the Wi-Fi vault, which currently stakes collateral into governance, has adjusted its withdrawal fees, all in an effort to boost yields. And this is kind of a trend in all of the DeFi protocols. They expanded quite rapidly because you could earn monstrous returns by providing liquidity to the protocol. And as those returns have kind of fallen, as I believe it was Vitalik said that would probably be the case as these programs started to mature, that would be the true test on whether or not they're going to be here long term. I still think they're a fabulous way for more advanced crypto users to get into the space, but they do need to do more to attract newbies, improve their user experiences, and keep these percentages up for the midterm at the very least, to get a solid user base under them. But yeah, so Yearn is feeling the pinch just like everyone else. Crypto DeFi's golden boy. But hey, let's hop on over EOS. We got a little bit to talk about with them. Don't really talk about them too often. So Google Cloud is joining the blockchain community. So software and EOS developer Block.one announced this news via a blog post published on October the 6th. According to the announcement, apart from joining the network, Google Cloud is also aiming to become a BP, or block producer on the chain, which is huge. This decision to allow Google Cloud to become a BP will be put to a vote amongst its token holders. Currently, 21 BPs form the core part of the EOS network. Also joining the public blockchain platform will mean that the tech behemoth will bring its premium infrastructure, which could benefit the EOS network. This is huge for EOS in so many different ways. Google seems to be investing in it, so they must be seeing something nice. EOS has just launched their Voice social network. Google had that Google Plus thing that kind of fizzled out, so maybe they're dipping their toes back into the social media water in some weird backhanded way. I don't know. Me wildly speculating, but still pretty good for EOS. In another development, Block.one also announced the appointment of Wall Street veteran Martin Chavez to the firm's head advisory board. He's held various top executive roles at banking giant Goldman Sachs, and he's going to be helping to promote the global adoption of the blockchain technology. So, yeah, EOS had a 1-2 punch of some really nice announcements. Getting Google into your corner is pretty huge, and if they get voted in, become a blockchain provider, they're going to be able to bring a lot of resources to bear, and it's going to be really good for EOS and the community as a whole, so I expect they'll get voted in pretty quickly. Token holders are incentivized to help the market grow and earn back their investment. So I already think it's a done deal, but that remains to be seen. Crypto's nothing if not crazy. All right, so getting back into some hits. Ripple's talking about potentially relocating to Europe or Asia amid growing frustration at the lack of regulatory clarity in the United States, which has been an ongoing theme for the United States. They've lagged behind both in regulatory clarity and in blockchain technology and startup incubation, re China. Speaking to Fortune magazine's Jeff John Roberts on an October 6th LA Blockchain Summit, Ripple co-founder Chris Larsen said that the United States was woefully behind in preparing for the cryptocurrency-based next generation of global financial systems. Coupled with U.S. authorities' policy on regulation through enforcement, and Ripple may consider leaving the country behind entirely as a result. The message is blockchain and digital currencies are not welcome in the U.S., Larsen said. You want to be in this business, you probably should be going somewhere else. To be honest with you, we're even looking at relocating our headquarters to a much more friendly jurisdiction. Larsen said the firm was considering countries like the UK, Switzerland, Singapore, or Japan because in the US, all things blockchain and digital currency start and end with regulatory bodies like the Securities and Exchange Commission. So that's a pretty huge announcement from Ripple. They have been a very solid producer for the US in terms of crypto and blockchain. They've definitely been one of the bigger chains that is located in America, and they've played very nicely with regulators. So for them to be like, look, we're playing by their rules, but it's getting to be too much. We maybe need to move out. It's almost like the United States is an abusive relationship holder towards crypto and just kind of forcing people out. I do not like to be hearing that. I really do think the United States, to remain the financial dominant that it is, it needs to embrace these new technologies, and it just has not. So, not liking that, but Ripple's got to do what is best for them. So let's take a half second, stand up, stretch, walk around, and let's hop on over to the next thing. All right, well, in a bit of late breaking news, Trump's done something pretty interesting that some experts are saying caused a Bitcoin dump shortly thereafter. So back and forth discussions within the United States administration in regards to a second stimulus package for its citizens have been ongoing for months. The back and forth has been quite insane. Today, President Trump decided to push the matter back until after the 2020 presidential elections have concluded. This appears to have resulted in a price drop for Bitcoin and other mainstream markets. I can definitely agree with that. Talks looked like they were heading in a right direction. Pelosi and Treasury Secretary Mnuchin had both spoken positively on the results, and there seemed to be a chance that an actual deal could have been in the works. But Trump did come once he left the hospital, he put a stop to that. So no further stimulus package talk will occur prior to the election, the president said in subsequent tweets. Quote, immediately after I win, we will pass a major stimulus bill that focuses on hardworking Americans and small businesses. Yeah. All I know is a lot of people, my family included, could have really benefited from a stimulus package. Not a huge fan, and I can see why it caused the drop in the crypto market and any market when you're expecting a large amount of money to get pumped into the American economy to help re-stimulate and continue to stimulate us. that those of us who have been really hit by this COVID crisis, then to have the rug be pulled out from under you in tweet form, I can see why it causes a dump. That's all I'm going to say about that. So, moving on to something a little bit good, and then we'll end on kind of a down note, so I do apologize. But according to Bloomberg analyst Mike McGlone, Bitcoin's going to hit $100,000 in the next 5 years. Oof, boy, fingers crossed. So, yeah, he premised his argument on past Bitcoin trends, so talking about how it took the price 4 years to go from 100,000 to 10,000 back in 2017. So basically saying you play that over the next 4 years, you're looking at, $100,000 in the next 5. So by doubling the time frame, so from 4 to 8, I get it. So doubling that time frame for maturation, we could get the price towards $100,000 in about 5 more years. He said on Bloomberg's Crypto Outlook report for October, most demand and adoption measures indicate Bitcoin is more likely to stay on its upward path. He observed that a top metric for adoption, the 30-day moving average for Bitcoin addresses, is equivalent to a price of about $15,000, suggesting that the current prices of $10,700 at $10,700, the cryptocurrency is greatly undervalued. He sees the digital asset breaking above $14,000 by year's end, though with the current depressed state of just the economy overall, I could see that not happening just because supply and demand are intricately linked, and if not as many people have the money to buy it, demand's going to fall, and that's going to keep the price in kind of a wait-and-see pattern. The report also speculates that the market capitalization of Tether, or USDT, will surpass that of Ethereum by 2021 to become the second largest cryptocurrency in the world by market cap. I actually could kind of see that. As a stablecoin, it is pretty ubiquitously used around the industry as like a safe haven place. So as people trade back and forth, Tether's market cap has hit almost 16 billion. As more and more people like me are moving over to stablecoins to kind of hang on to things while the market dips, I could see that happening, especially if Ethereum doesn't hit its metrics, but that's much less likely. But 5 years, $100,000 Bitcoin, anyone got a problem with that? Anyone? Nope. Not me. Alrighty. Well, hey, on a bit of a downer note, the United Kingdom is banning the sale of Bitcoin, Ethereum, and XRP derivatives to retail customers. So not crazy, they're not banning crypto itself, just derivatives, which are kind of high-risk trading funness anyways. So it's not a huge problem, honestly, for the crypto space, but it is kind of So, the market for crypto derivatives and other cryptocurrencies has taken a severe hit for the derivatives portion of it. The United Kingdom's Financial Conduct Authority, or FCA, has banned its trading for retail customers. In the official announcement, the regulator declared that the above products are harmful to consumers for 5 main reasons. Excuse me one second. All right, going through. The regulator stated that the underlying assets do not have a reliable basis to protect their value. The FAC believes that abuse, illegal activities, and financial crime are widespread in the secondary crypto market. Cryptocurrencies are extremely volatile, and that end users do not have a sufficient understanding of the underlying assets. And finally, that investing in derivatives of cryptocurrencies is a, quote, harmful investment. Oof, so they really didn't pull back any punches. So, the measures apply to companies and firms operating within or outside the United Kingdom. So basically that you will not be able to buy, sell, or trade or do anything with derivatives if you're a citizen of the United Kingdom, whether or not the company you're using is based inside or outside. Not too bad. So according to the FCA's announcement, the prohibitive measures will be taking into effect on the 6th of January of 2021. The regulator has asked companies and firms to trade in crypto derivatives to stop their operations before this date. In the meantime, regulators advise investors to, quote, stay alert for crypto scams. From now on, they qualify all companies offering crypto derivative products to retail consumers as possible scams, which, again, kind of a bit of a punch here. It does take a pretty serious hit to crypto traders inside the UK who like using derivatives. But as regulation continues, more and more countries are going to allow or disallow certain things, and there's nothing to say that the United Kingdom won't change their view on this as the crypto community becomes more established, ingrained, people become more knowledgeable, regulations start, tightening and relaxing in different areas. This is simply what they're doing right now. It can always be reversed. But still, I can see why it's a bit of a downer, and it is kind of a hit to the derivatives market, especially in the European area. But it is what it is. So, that will do it for the trending articles in the crypto news space today. As always, my name is John. This is Crypto Top 10. Woo! Let's take a look at the top 10 coins by market cap. Bitcoin sitting at about $10,592. It did take about a 1.5% hit after the announcement of good old Trump. In fact, all of the top 10 coins are down. Polkadot's down 10%. Chainlink's down 8%. In fact, nothing in the top 10 is in the red. As far as the overall market is concerned, EOS is up 6%. It did pop up that 17% after the Google announcement, but has retracted a little bit, probably due to, the other announcement. As for the drops, Puma still coming up as being down almost 90%. I'm not too sure about that. Ocean Protocol's down 18. Solana's down 18. Lend is down 18. That's a bit of a hit. I did buy into some Lend, and God, that hurts. Anyways, so if you've made it to this point and you have not subscribed, why not hit that little button right there? That way you can hear my sultry tones every single weekday, unless I get hit with a 12-hour day at work, which does happen from time to time. And for those of you who have subscribed, thank you. Alrighty, I will talk to you guys all soon. Have a good one,